Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is Nolan Watson of Sandstorm Gold and Sandstorm Metals and Energy. Thanks for joining us here today, Nolan.
Well, thank you for having me. I appreciate it.
Thanks for coming back, Nolan. Our first question for this interview is we wanted to focus on the macro picture. A lot of stuff has been going on around the world. Recently, central banks around the world have been releasing stimulus packages here in the U.S. and England and China and Japan as well. So I want to get your thoughts on the macro picture. What do you think is going to happen going forward now that they've done the stimulus package? What effect would that have on the global economy?
Well, obviously, anytime you flood the economy with significant amounts of cash infusion and take other risky assets off the balance sheets of the investment community and put it on the balance sheets of central banks, it's good for equity prices. It's good for anything that is an asset out there. It just infuses liquidity into the system, if you will. But realistically, I think that the situation that the governments around the world have gotten themselves into is that the only way out of the problems that they have with their balance sheets is by printing more money. They have long passed the point of no return, whereas 5 years ago you could argue that by increasing taxes potentially a bit, stimulating the economy, and reducing the ongoing bureaucratic expenses, you might be able to get your budget deficit on side. That day has come and gone a long time ago, and they can't do that anymore if they've got to print money.
So in essence then, Nolan, you see a worsening stagflation because, we have the financial repression. We have the hedge fund managers like Ray Dalio, who's a billionaire, who's managing around $100 billion worth of capital, and they wrote the paper for Wall Street to give basically to hand to the Fed about, we need nominal GDP targeting. We need to take this junk off the bank balance sheets. And I just don't see a lot of the capital, for the most part, going back into Main Street. I just see the capital basically still flowing to Wall Street and the banks and to hedge funds who know how to borrow at 0% and then speculate on assets. Is that correct, or do you see things differently?
Well, I think that's generally correct. I mean, what the infusions are doing is keeping Wall Street solvent. These things always do eventually end up affecting Main Street. I mean, people's ability to get a mortgage on their house is dependent on the solvency of the banks that are giving the mortgages. So you may not actually see the money get into the pockets of people, but the availability of credit to Main Street people is certainly dependent on these stimulus packages. And I think you're right with respect to increasing inflation, but no actual real GDP growth in real nominal dollar terms. Or in real dollar terms. I'm very bullish on precious metals and things like that because they're just going to have to keep decreasing the value of the U.S. dollar and the euro to keep government solvent.
I definitely agree with you on that one. So is it safe to say that you expect that the central banks around the world to continue with their stimulus packages down the road? So we'll see another QE4 and another 5 until I don't know, we run out of trees because they got to print all these money.
Well, part of me wants to say I'm already predicting QE8. But,
oh, wow.
but on the flip side, you might not need QE4 because QE3 almost looks infinite. I mean, it's quantitative easing to infinity. They just announced that they're going to be basically buying $40 billion worth of securities every month, and that there doesn't necessarily need to be an end in sight. So the quantitative easing has just started in a big way, and I don't see it stopping.
Great point. And you mentioned precious metal, that you're bullish on precious metal. What is your price target for gold now that they coordinated this global stimulus package? Do you see that gold could possibly hit 2,000 by the end of the year?
I frequently tell people, you tell me how much money they're going to print, and I'll tell you what I think the price of gold is going to be. Realistically, I do think that gold is going to get close to $2,000 a year by year end. It'll either be just under, I think, or just over. And I think it'll continue to increase in U.S. dollar denominated terms from there.
Yeah, and I think that's a really important point, Nolan, about gold. Do you expect silver to outperform gold then in that time frame, or do you think that the volatility in silver, along with the base metal story, is going to hurt silver more than gold, and gold is only going to be viewed by the market as the main safe haven?
Well, I think silver is starting to be viewed again by people as money again. I do think it'll do well here with gold. I think that the silver market is one that has a lot less liquidity than gold, so it's often affected by other factors in the short term more than gold is. So, for example, if the silver ETFs are adding to the ETFs, the silver price tends to be affected by that more than gold does when gold's added to the gold ETFs. And conversely, if silver is being pulled out and liquidated out of ETFs, it has a more of a negative implication with respect to silver. So I think silver is going to track gold fairly well in the long term. In the short term, it may have positive or negative fluctuations depending on the week-to-week and month-to-month fundamentals.
Now, I have a question. I hear all this talk about gold and silver being manipulated by the banks. Do you believe in any of that, or do you think it's all hearsay?
Well, to some extent, I think that I wouldn't consider myself a conspiracy theorist by any stretch of the imagination, but I do believe that to some extent many commodity prices are temporarily played with by various people around the world. You know, the various fact that ETFs exist is some ETFs are being created by people who are trying to increase metal prices. There's groups that are trying to start up a whole bunch of copper ETFs right now, and I guarantee you somewhere they are very, very long copper, and they know that if they make a massive copper ETF, it's going to take a bunch of copper off the market, it's going to reduce the copper supply, and it's going to increase the price of copper, and they're going to make a bunch of money. So things are always being played with by certain people in one way or another, either to increase the price or decrease the price. And although a lot of the conspiracy theorists believe that gold and silver have historically had various entities trying to keep the prices down, I do believe that there are entities out there that have tried to do that to keep prices down. I also know of entities out there that are doing things to try to get the prices up, and it becomes a big game of who's better at manipulating things.
I would definitely agree with that, Nolan. And I would also point out, to add to your points there about the commodity markets being moved up or down by political people or some of the economic elites, that a lot of the OPEC countries, and especially also like Russia, Saudi Arabia, those guys, they need oil prices at least sometimes $110, $120, $130 a barrel going forward, because they have to cover all their social program spending. So they're going to have to do what it takes to get the price to a certain level, whatever that may be.
Yeah, there's no question about it. Absolutely.
Okay, well, I want to transition now. Combine the macroeconomic picture with the financing of capital markets, because as Sandstorm Gold, you guys are basically the gatekeepers for capital for a lot of these juniors. So what do you think the risk-on, risk-off environment has done to junior financing over the last 12 to 18 months? Because up until this recent rally in gold and silver, a lot of the mining stocks had just, especially the juniors, had just gotten clobbered. I think from the analyst John Kaiser of Kaiser Bottom Fishing, he said that more than 50% of the venture exchange was down almost 80%. They had less than 6 months or less of working capital. And, you know, basically it sounded like if metals prices didn't pick back up, it sounded like in 8 months a lot of the companies were going to have to either sell out for pennies on the dollar to a larger company or go bust.
Yeah, that's absolutely the case. The equity financing window closed for the vast majority of companies. In Vancouver here, we have several hundred publicly listed resource-based companies, and of those several hundred, there might have been 10 to 20 of them who would have been able to raise capital, and the rest of them couldn't over the last 6 months. That is changing a little bit here with some of this quantitative easing and metal prices going up and liquidity being infused into the system, and institutional investors are starting to get inflows into their funds again, and they're starting to deploy it. But we're not seeing the same type of turnaround that we did over the last few years. Generally speaking, when these equity windows close and people can't raise money, when they finally do open back up again, there usually seems to be this flood of capital. This time that's not happened. What's happened is institutional investors have started making some investments, but very, very selectively, and only for the best names in their portfolio and the things that they like the most, and they're still staying completely out of the small illiquid juniors. So that window from a financing perspective is still closed. There are still companies withering and dying on the vine, if you will. And I think realistically, as the equity markets open and close, I think that it's very unlikely that they're going to open for the smallest of companies. So if you're a $10 million market cap company or below, the probability that you're going to be able to raise any significant money over the next couple of years is low. And I think you're going to see a lot of those companies go insolvent and sell off their assets and or merge off, and they just won't exist a few years from now.
Yeah, the volatility, Nolan, has really worried me about holding multiple positions in some of these juniors that are more than, I would say, 18 months away from any kind of cash flow. And, you know, you look at some of the deals that were done, like First Majestic Silver bought Silvermex. I think First Majestic Silver got a really good bargain on that. And then you look at Extori Gold, which was, I think, a $15 stock, and they had a really high market cap. They had a pretty darn good high-grade gold and silver deposit in Argentina. And they sold out, you know, it seems to me like at the bottom there because of financing issues, because I think management didn't do a very good job of raising capital when the stock price was high. So basically then, to wrap up the summary of what you just said, you expect more of these types of deals, and you expect the producers with the capital to benefit then from undervalued assets?
Absolutely. I think that there are a lot of companies and assets on sale right now at bargain basement prices because they just don't have the capital to push things forward, and they are unlikely to get it. And so, having said that, a lot of the producers and people with cash flow are being much more selective than they used to be about buying assets, because there have been so many times where mining companies have gone out, bought an asset that they plan on going and building the mine on, and then the CapEx number doubles by the time they go to put the mine into production, and management teams look bad, investors get frustrated, investors get mad, and so people are not looking to make acquisitions at the same pace that they were 2 years ago, even though prices are lower today. So things are on sale, but companies are pretty hesitant to buy things. I think you're going to see a lot fewer acquisitions in the next year than you've seen over the past couple of years.
That's an excellent point there. And I want to shift gears to Sandstorm Gold and Sandstorm Metals and Energy and talk about your company for a little bit. Since we last talked, Sandstorm Gold had done two additional deals. One is for Mount Hamilton, and the other one is the Colossus Mineral deal. Now, let's talk about these two deals. What did you like about these two deals out of the probably hundreds of companies you talked to? Why did you pick these two companies to do a deal with?
Well, with respect to Colossus, that is a really, really neat mine that's being built there. It's incredibly high grade. It's got an ore body that's 35 meters in width and 75 meters in depth that probably has somewhere between 15 to 20 grams per ton of gold. I mean, it's truly a remarkable deposit, and it's got platinum byproducts, and we did the deal partially on the gold and partially on a platinum byproduct. And the other reason I like that deal, although it's the first time we've done a platinum deal, and although I'm more bullish on gold than I am on platinum, one of the reasons I like platinum is because 80% of the world's platinum is produced in South Africa. The cost of producing platinum in South Africa on average is not much less than the current spot price of platinum, and costs are going up almost 10% a year right now in South Africa. So either you're going to have to see increasing platinum prices in the future, or most of the world's platinum mines are going to shut off here in the next couple of years. So I'm betting that the platinum price goes up over the next few years, and I like the deal because of that. With respect to the other acquisition that you referenced, the Solitario one, that was actually a new type of deal for us. This is one where they've got the Mount Hamilton project down in the United States, and it is an asset that we like quite a bit. We did extensive due diligence on it. We think it will be a mine one day, and we would like to do a stream on that mine, but there's a few more steps that they need to do before they're ready to do a full stream. And so what we did is we gave them $10 million in exchange for a 2.4% net smelter royalty, and what we got with that is the right of first refusal to do a stream financing if and when they decide to do a stream financing in the future. So they're not obligated to do a stream financing, but if they do it, they'll likely be doing it with Sandstorm. And if they don't do it, then, hey, we've got a net smelter royalty and we'll make money on it. So we think it's a good deal for them. We think it's a lot more accretive than them issuing equity. And we think that type of model will be good not only financially for Sandstorm and our shareholders, but also from a tying down potential future growth, because there's a potential future stream there. So we're happy. We like the couple acquisitions we just made, and we're working on more acquisitions. We've got a bunch of stuff in the pipeline.
And the platinum and palladium prices, well, the demand for them might decrease, but I expect the price to go up because of scarcity. And then also out of South Africa, I mean, there's tremendous supply issues. You might have supply disruptions or mining just stop in general. So you guys have secured a much safer platinum and palladium supply outside of South Africa, which I think is very important.
Yeah, you're right. That's a key point. That of the world's platinum supplies, of the 20% that's not produced in South Africa, we're in that 20%, not in the South Africa part.
Excellent point. And for people that don't know the term for the agreement that they had with Colossus, Sandstorm Gold has agreed to purchase an amount equal to 1.5% of the gold and 35% of the platinum produced from the Sierra Pelada mine. And in exchange, Sandstorm Gold will pay an upfront cash of $60 million. So you just mentioned that you got a couple more deals coming down the pipeline. Should investors expect that to come pretty soon, or is that something that might happen in the next calendar year, to say 2013?
Well, anytime you're negotiating these types of deals, there's multiple things moving around, and they're actually surprisingly complex to put together behind the scenes, and sometimes it's tough to tell how quickly the lawyers are going to move on various things and when other pieces are going to fall into place. So I wouldn't be surprised if we have deals before year-end. I also wouldn't be surprised if there are delays in them and it takes till early next year for us to close on them.
That's great. Now, I want to talk a little bit about Sandstorm Metals and Energy. A lot of investors shy away from Sandstorm Metals and Energy because of the exposure to base metals and natural gas, which usually doesn't do very well when the economy is not doing well. How do you respond to that?
Yeah, I think that's a legitimate point. Base metals and energy prices tend not to do well when the economy is not doing well. Today, that's fully priced into our stock and then some. I think that even if base metal prices don't do well, Sandstorm Metals and Energy can and will do well, because that is priced into today's price. I do think that we're going to be able to keep doing smart deals in the future, and as some of these assets that we have done deals on start producing, that we should get a rewriting in our stock price. We're up about 40% over the last few months, and I hope to keep us going in that direction.
Are you guys planning on diversifying more into other forms of energy, like, say, oil or uranium or geothermal, and then maybe other base metals? Or are you guys pretty much going to focus on copper and U.S. natural gas?
Well, I think, although I don't know what the next 12 to 24 months is going to look like, long term, 10 years from now, I think we're going to have lots of commodities well beyond copper and natural gas and those types of things. I wouldn't be surprised if one day you saw us in things like zinc or uranium, maybe some more natural gas, potentially nickel, more copper, and all over the place. We're going to focus over the next couple of years on doing the right deals that are short-term to production so that we can get cash flow as fast as possible. And I'm not quite sure which deals those are going to be and which commodities they're going to be, but we're going to play it by ear.
That's an interesting point. And usually the junior oil companies are the ones that are able to get into production faster. So is your company looking into junior oil companies? Because compared to gold and silver mining companies, they can get in production and create cash flow a lot faster. So are those companies in your radar?
Junior oil companies absolutely can get into production faster. One of the downsides of oil compared to hard rock mining is that each well has a natural decline rate where unless you build additional wells, your production decreases. One of the things that I love most about the streaming model and most about what Sandstorm does is that when we get involved in deals, we get all of the exploration upside. And we may, Luna, for example, on the gold side, we thought we were getting a 500,000 ounce mine, and it's going to be many millions of ounces. And we we absolutely love that about our model, and it allows us to make lots of money for our shareholders. So to be candid, I do prefer things that don't have natural decline rates, where you will see us play in oil and gas or situations where we think, in our natural gas deal, for example, we did the deal assuming 50 wells, but they very well could put in 200 wells on their property, so there's sort of our natural exploration upside. And those deals are tough to find, but we got some smart guys hunting for them.
Okay, very good. So I just have one final question here, Nolan, and then we'll let you go. Over the next 12 to 18 months, what goals would you like to see Sandstorm Gold accomplish, and what goals would you like to see Sandstorm Metals and Energy accomplish? Because I know you already accomplished the uplisting, so maybe you could tell our listeners about some more of the goals.
Well, with respect to Sandstorm Gold, our goal is more of the same. We want to continue to do smart deals that will increase our cash flow per share, that will increase the scale and scope of the company, that will increase its diversification. The more cash flow that we get per year coming from the more sources, the more valuable we are and the less risk we have. And so we're going to keep doing that. I think we're going to keep adding good value for net asset value per share. In Sandstorm Metals and Energy, we have a two-pronged approach. One, we have entered into a couple of deals where those deals have been challenged, and they've had situations where the counterparty hasn't been able to raise sufficient cash to continue to push the mine forward. Our objectives over the next 12 to 24 months are to restructure those and fix them up, get them going in the right direction, or monetize them. And then we've also got some great deals that we've done, and those are going to naturally start cash flowing. And so the other objective that we have is to add to those really good deals, and 24 months from now, with the view of having Sandstorm Metals and Energy be a company with a bunch of good streams and being out of the bad ones, and have people be really excited about the company and be in a cash flow positive situation where shareholders, again, see the benefit of being a streaming company. It's going to take us time to get there, but I'm confident we will.
Okay, great. Well, thank you for your time, Nolan, and we appreciate you coming on for an interview. If people want to find out more about your company, where can they go? And if you don't mind, give out your ticker symbol.
Our ticker symbol is, for Sandstorm Gold, is SSL. And that's on the TSX Venture Exchange, and on the NYSE, we trade in the New York Stock Exchange market under the ticker SAND, which is SAND. And for Sandstorm Metals and Energy, our ticker is SND.
We want to thank you for your time, Nolan, and congratulations on the Colossus deal and on the uplisting, because, the other interviews we did with you, you're one of those few management teams out there that continually does what they say they were going to do.
Well, thanks. I appreciate that.